Hi, my name's Josh Mahony, Chief Market Analyst at Scope Markets. Let's look at some of the top earnings for the week starting Monday, the 29th of April. This comes hot off the heels of a week that's already seen tech dominate, and tech remains a big theme for this week ahead, with the likes of Apple and Amazon really heading things up. So let's get into it. First and foremost, we want to take a look at Amazon. Of course, the big focus here is on consumer demand, of course, but also that growth in terms of AWS, Amazon Web Services, and their cloud-based services. Also, the growth of AI and how much they're going to be able to integrate that into their solutions going forward. In terms of their performance versus expectations, well, they've managed to massively outperform earnings per share and revenues over the past 5 quarters. So does this mean that we're looking at a company that does very well when it comes to setting things up and delivering on the day? Certainly what we've seen in terms of price action over the last week was that Tesla came out with relatively poor numbers. They came short of expectations, but the outlook going forward in terms of the expansion of their offering for the cheaper new vehicle did boost markets, whereas Meta hadn't necessarily seen the same kind of downside in their share price leading into this announcement. And therefore, it made a bit of a higher bar for them to actually achieve significant gains. Instead, we saw a significant decline at the open for Meta. And that comes despite beating on both top and bottom line. So bear in mind, these numbers, they can beat, but sometimes it comes down to market expectations coming into it, market pricing coming into it, valuation metrics coming into it, and also the company's outlook going forward. So certainly the perception of how this year will play out will be interesting. And I think that out of these companies, this is probably one of them that looks quite well set up from the perspective of it is essentially looking for a strong economic outlook, strong economic development. And if you look at the perception of how things are going to play out over the next year and a half, 2 years, the view is that we're going to see a moderation in terms of the growth rates associated with AI and these big tech names. And instead, we see a pickup in growth rates elsewhere within the market. Well, Amazon, I think, could potentially take advantage of that as we shift into a sort of pro-cyclical phase, because it is also a very pro-cyclical stock as well, which will serve to benefit as people consume more as the economy picks up. And you can see that with the outlook, the projection going forward that we've got here, signaling that pick up over the course of the year, that gradual gain expected over the course of 2024. In terms of the share price, let's just look at the chart here. Weekly time frame shows you the decline that has been playing out of late, but by and large, the trend is very much a favorable one. You can see that we do have these periods of downside, and it's a question of whether you're an investor and you're looking to sort of dip your toe into these big names, or whether you're we're looking at the Mastercard share price there. This is the Amazon share price here. And again, you can see a similar kind of theme, and that is that we're seeing this pullback set within a very bullish trend. The difference here is that we've come into this key area of resistance, this historical resistance level, and started to see some weakness from that 188 mark. But ultimately, this is a market, as I've said, with Mastercard that has got this pullback, but generally has been in a very strong trend, certainly since those lows at the beginning of 2023. So is this 188 level the top, or is this going to be just a pullback before we head higher once again? Certainly, the near-term trend is done with, because we've broken through this trend line support area. We're also breaking through swing lows on the way down. But I would say that the most notable swing low on that way down to sort of give us that bearish view over the near term would be this 171 area. So do we break the 171.5? If we do, that could point towards a wider pullback for this market. But ultimately, I think even if we do come into that kind of move, I think we'd be looking at a retracement of this wider move here. And you'd be looking, if we see a wider decline associated with weakening economics or weakening earnings outlooks, or a continued pushback in terms of the expectation of the first interest rate cut, which I think is very unlikely, or very likely to happen, that we see that pushback further into the back end of this year or even into 2025. That could put downward pressure on some of these stocks. But nonetheless, this is a market that I believe will do very well once markets have sort of sorted their feet out. So whether we see further downside really comes down to whether we break the 151, 151.5 kind of level. If we do so, then we're looking at a wider pullback. But then you'd be looking at this area with the 166, 161, 154. And essentially, it's a case of just looking on this 4-hour chart and just picking the bones through this trend as it plays out. The hourly time frame should probably give us greater clarity on that. So there you go. So we've got this near-term retracement coming into play, and we're rolling over once again. We've come into a nice deep retracement, slap bang on that 76.4 Fibonacci, and heading lower once again. So near-term downside really associated with market conditions as they stand, but hopefully Amazon will be able to come out with some bullish statements looking forward rather than concerns. But if they come out with concerns looking forward, that could even overshadow any strength that we see in terms of earnings and revenues, which we have already seen they do pretty well in managing to beat. Then Mastercard, we've got on Wednesday. We can bring you back to that chart. If we're talking about companies that manage to beat expectations, this is a great example of that. And you can see here we've got the last essentially 2 years, so 8 quarters on here. They've managed to beat on earnings and revenues for all 8 quarters. So this is a great stock to be looking at. And certainly you're looking at a company that has really benefited from that ramp up in inflation, because the value of transactions continue to rise despite the fact that people are getting less for their money. And in terms of the share price, you can see here the weekly time frame shows you what a great run this stock's been on. But we have been turning around over the course of April in alignment with the wider market conditions anyway, quite frankly. So if we see further downside, I'm sure people will be dipping their toes in, seeing value, because this company has been shown to be a very strong performer. The question mark only really comes if we think that people are going to start sort of pulling back on spending habits and inflation's going to suddenly shrink. Well, inflation, the problem at the moment is that it's staying above target. So I don't think that's suddenly going to go into sort of negative territory or anything like that to concern them in terms of the value of transactions. And then it comes down to spending. And ultimately, the US economy has proven itself to be very strong. We're seeing US GDP remaining strong, and the jobs market, I think, by and large, looks relatively strong. So weakness over the near term may play out, but I think there's a good chance that we're looking at a company that will probably come out with relatively strong numbers if you go by everything they've seen over the last certainly 2 years, where we've seen all of that outperformance. And so it's a case of just following this trend. The trend still remains bearish over the intraday basis at the moment. We'd need to see a break up through this 471 level to negate that. But certainly this downtrend, I don't necessarily think it's going to be too long lasting. I think this will be the kind of stock that people will invariably try to really utilize this pullback, given the fact that it hasn't really given us much of that over the course of the last 6 months that we've got on this chart, but certainly from a wider perspective since those lows that we've got here in the sort of back end of 2022. And finally, Apple is, of course, not necessarily one to leave till last, but this is a absolutely massive stock, and it has, of course, had plenty of question marks, most notably around demand over in China, also around the supply network. We saw the breakdown in terms of travel within the Red Sea region, and that raised concerns. And of course, we're looking at potential ramp up in terms of the tariffs faced on goods going from China into the US if Donald Trump comes into power this year. So what might happen in return? So we don't necessarily want to see a breakdown in terms of relationships between these two countries. And that might happen with Donald Trump. That provides a potential headwind. Of course, the Chinese economy as a whole has been really struggling over recent years, and that hasn't necessarily benefited the likes of Apple, nor has it benefited the likes of Tesla, as we've seen with the share price. But in terms of Apple's share price, let's just grab that. Just looking back here, we can see essentially over the last 8 quarters, the one quarter stands out in terms of weakness, but for the rest of it, it's been relatively strong. And in terms of what we're looking at for sort of earnings per share, well, it's a cyclical stock. So generally this company does particularly well when they bring out a new iPhone, and you can see that in the last quarter, and then it sort of drifts off a little bit before they gear themselves up for the next one for Q1 2025, their financial year. So we're expecting it to decline on a quarter-on-quarter basis, but that's not necessarily going to be a surprise because it's relatively cyclical in nature. So 1.5 essentially on the EPS expected and 90.34 expected on the revenues. And then, like I said, we'll get back to the charts here. We can see the weekly Apple chart here, giving us a potential double top formation here with the neckline taking shape around this low here at 165.6. Now, we did move below that, but it's important to be cautious of big breaks like this because we've actually seen a sort of fake out here with a rally back up towards the upside. So this could be the support level that holds and ultimately we bottom out. But ultimately, this earnings report is going to be absolutely key within this. And if we break back below the 165 level, then that's going to really provide some caution for anyone looking to buy into this stock. We'd really need to see a significant sort of bullish signal over the more intraday basis to fill us with confidence in terms of looking to buy the stock if we broke that support level. Here is the Fibonacci of that wider move. I'm just highlighting it because if we break that support, I know that we like to target, double top formation. The target is generally a projection of the neckline to the top of that double top formation and projected lower. But I think this would also be very notable. The likes of your 61.8, which is 153, and then the 76.4, which is 142. So if we break that neckline, then maybe we could start trending lower towards some of these Fibonacci levels. And certainly, I think there is likely to be still some jitters going forward as people possibly push those rate hike expectations further into the distance. But nonetheless, as things stand, we're rebounding from that double top neckline following a significant period of downside. We're seeing some strength coming into play here, but ultimately we would really need to see a break up through this swing high of 178, just above that, 178.36 to mark the end of this trend that has been playing out since that peak in December, where we're seeing the pattern of lower highs, lower lows, and that would only really break with a break up through 178. So we're regaining ground at the moment. There's a possibility that that's short term in nature. But the key thing here is, do we break the 165 neckline once again to complete the double top? Or do we break the 178 to end this pattern of lower highs and lower lows that we've had playing out since the back end of 2023 for Apple?